Howdy there, folks. Welcome into this video here today. So just a few hours ago, Ttcf participated in the 34th annual Roth conference, and I want to take you through what the CEO, CFO, and the other executives just said here, okay? Now, the CFO had a very, very interesting statement that I want to share with you here. Also, Sam Galletti, the CEO, said something pretty, I would almost call it shocking toward the end of this that I want to share with you guys so you are aware of kind of what's going on here. Obviously, I'm a huge investor in this stock, and yeah, you know, I want to just share the most insight I possibly can on their comments. Once again, this just came out a few hours ago, and so let's jump into this. I hope you guys enjoyed as always. Let me know if you enjoy a video like this. This is, you know, going over a conference. These sorts of things are extremely vital. If you're an individual stock picker, these are very important things to watch, listen to. These conference calls, those sorts of things are very, very important because you'll hear insights. You will hear information that you're not going to hear other places. And sometimes they might slip up and say some stuff. Sometimes they're just going to divulge some very good information. So yeah, let's jump into this, guys. Hope you enjoyed it as always.
At least. So thanks for coming. We have 25 minutes, so going to kind of launch right into it. But first, just to introduce the folks on stage. So it's Sam Galletti, Sarah Galletti, Stephanie Dykman, Matt Williams, and Gasper Grassi. So the whole team.
Yeah. Okay. Let me say something first off. Okay. I've been in the stock market for 14 years. I ain't ever seen a team pull up with 5, okay? This is a whole other level. They pulled up with 5 troops for this one, okay? Yeah, this isn't... Wow, they brought the whole family. That's all I can say. Like, usually how it works, let me just explain this to folks. Usually how it works is maybe one executive will go to one of these conferences, maybe 2. You don't bring the whole squad. So Ttcf, they roll different, man. They roll different. That's all I got to say.
I mean, we have, like I said, 25 minutes. I'm going to leave maybe 5 minutes at the tail end for Q&A. So if you have questions, there will be an opportunity.
Look at this guy. Oh my gosh. Look at him. He looks good. Look at him.
So just to start with,
don't mess with
sort
that,
of
man. Don't mess
the
with
big news from Friday, I guess, the accounting issue that came out. I was curious just if we could cover that first. And if you could just talk about sort of what the issue is, what the restatements are going to be, you know, just give us a kind of high level of how you expect all of this to kind of play out. And also when you expect to release your fourth quarter earnings.
This is very, very important. Obviously, a lot of people made this out to be some huge thing. And so let's hear what Stephanie has to say.
So the restatement has to do with a complicated tax issue in relationship to 825,000 shares from the SPAC merger. And so the entire effect will be in tax. And we put on the deferred tax asset 12/31/2020. We have the full valuation allowance June 30th, 2021. So there's no effect to operations, no effect to cash, no effect to revenue. It is all a tax expense. We expect earnings and to file on time on Wednesday.
Ooh.
And so no delay on that. And
earnings and to file on time on Wednesday. So here we are, baby. Only about 36 hours away, 24 to 36 hours. Alrighty.
What will happen is you will have the restated quarterly financials within the 10K, and then we will go through and file the 10QAs after. So all information will be available on Wednesday.
All information will, so all the restatements and everything will be available Wednesday.
They'll be inside of the K.
Okay.
And then the 10 QAs will have the same information, and those will be filed subsequently.
Okay. So soon. Great. And then different topic. Sam, I was hoping to ask you this question. We've talked before about this topic a lot before, but can you give us a 10,000-foot view of the size of the market that you operate in and the share of kind of better for you products within that market and how quickly that's growing? So just kind of an industry broad overview.
Sure. By the way, if anybody's confused, if you don't really keep up super up to date with Ttcf, this is CEO, this is Sam Galletti, this is a superhero, Sarah. She's the one that creates all the amazing products and somehow just keeps the company innovating at a scale like I've never seen in the history of food companies. This is CFO right there, Stephanie. This man right here you're seeing there, he's let's call him Mr. Operations. All right, we'll just call him Mr. Operations, and this is Mr. Swiss Army Knife. We'll call him. Okay.
I think that first of all, the plant-based market, as far as we're concerned, it's not even at its beginning stages. It's just people are still trying to just understand what it is. A lot of people think of plant-based as a meat alternative when it's so much greater than it is. So it's really to understand the opportunity of defining how we are looking at plant-based foods is, I really don't even know how big the market sector is. It's huge. I mean, it's like some of our top items are like an acai bowl, people consider that, but it is a plant-based product. So there's the way we look at the plant-based opportunity is just, it's very multifaceted and always as a manufacturer, and just a huge opportunity for Tattooed Chef brand.
So you're defining kind of what plant-based is within different categories.
Absolutely.
And so of those categories, not to go I don't want to get in too much detail, but like, what are the biggest ones that
that's the toughest thing is, especially for me, somebody that's, investing heavily in these sorts of companies and plans to continue to for the next, several years, is trying to explain to people how big this plant-based opportunity is. And it's very, very much a challenge. And, I'm somebody that is of the belief that everybody will be moving to plant-based diets over the coming decades, right? Now, you might not believe that, and that's perfectly fine. Like, you can believe whatever you want to believe, right? I'm just here to believe what I want to believe. And so, it's kind of like, when let's say we went back 5 years ago in time, right? And you were trying to tell everybody that EVs are the future, and everybody in the 10 years from now or 20 years from now will be driving EVs, and like that will be what all the new cars are sold, right? If you went back 5 years ago, obviously you would have been laughed at. Even me in 2018 and 2019 trying to explain to people that you were laughed at, right? Now in 2022, that's like a real subject all of a sudden, right? Like, every big auto manufacturer is like considering EVs, and like, a lot of consumers, if you go up to an average consumer and say, hey, are you thinking about maybe potentially getting an EV for your next car? I think a lot would be either a yes or like maybe, versus 5 years ago, like, what? No, I'm not getting an EV. Like, what are you talking about? Now, all these people like see the power of EVs. They might know some people that maybe have a Tesla or something like that. They see their gas prices going up. So they're starting to like get it. That's still like the masses will still get it in about, let's call it 3 to 5 years from now. It will really click. And the same thing I see with the plant-based food sector. We're in such early innings there that you either get it or you don't get it. Like, there's no in between in this. You either get it or you don't get it, or you're either on the boat or you're off the boat. There's no like you're hanging on the side of the ship. It's either you're all the way on or you're not there. And so that's the toughest thing. And I'll try my best to explain like how big these opportunities are in the future, but it's a difficult one because a lot of folks they can't process how big it is. So
playing in, and how much runway do you have within those?
Well, the way that, again, it's like, for me, like we launched with the bowls that Sarah created, entree bowls. And we all know that there's tons of entree bowls in the supermarkets of different kinds. And so when we look at that opportunity, we're just cutting into legacy brands in a freezer, and we're taking that market share. That's the freezer area is so hard to cut into because it's a limited space. So, or like now,
it's a really good point, and I think that's very important that everybody understands that point Sam making there. Freezer space is obviously very limited. If Tattooed Chef gets items in there, they're kicking other brands or companies out of there, right? There's a limited amount of space that every single grocery store has or whatever store has for freezer space. So you're kicking somebody out, right? And so, this progress the chef has made in that last 18 months is nothing short of historic on how many brands they've kicked out, because, you see these freezer doors coming in the Target stores and these grocery stores, and it's like, dude, they're kicking out so many items, and it's just a start. That's the most amazing part.
With their acquisition of Foods in New Mexico in Albuquerque, us going after the Hispanic products that Sarah developed, and the innovative, just incredible burritos, enchiladas, etc. It's a huge potential market category, the Hispanic market, and these things that she created that we're starting to just hit the markets now is it's an unlimited amount.
Yep. And can you tell us more about the acquisitions? So there's been 2 of them recently.
Right. This in 21 there was 3 really, because there was 2 in New Mexico. One was the snack tortilla acquisition, and then there was the burrito enchilada quesadilla facility, and then there was the most recent was Belmont in Ohio, the nutrition bar facility.
And what's the timeline for us starting to see more products coming out of those, more branded products coming out of those facilities?
It's happening. I mean, it's happening already.
Yeah, you could see our burritos are now on the shelves of Kroger. So that's coming straight out of the New Mexico facility. So you're starting to see them trickle in now.
Yeah.
Yeah, and when she says, Kroger, that's only a very, very limited amount of stores so far already have the burritos actually on the shelves. You'll see if you go in your Kroger grocery store, likely most of the stores should have it within 1 to 2 months. But there's some stores you can actually go into. And we've had a few people in the private stock group post in the Discord chat, actually post pictures of, some of the burritos actually in a Kroger store. So it's cool to already see it, but you'll see it in mass over the next month or two.
And what about from the Belmont facility?
That is coming up. There's nothing announced yet, but obviously we've created the bars, which we're really excited about. We did show them at
These bars look amazing, by the way. I saw the packaging.
Expo West, but we have some interest, but there's nothing today that we have solidified.
I mean, we literally just
we
showed them last week at Expo West. Sarah developed some amazing. Tell them about the bars.
Yeah, it's an oat butter bar that has adaptogens in it, and so I think we're going to see more and more products come out today that have adaptogens in it, and it's just a bar that's focused on brain fuel. There's no added sugars. It's less calories than what we're competing with. The bar we're going with is a refrigerated bar, and we really saw white space there specifically because there's not very many competitors. And so I think that we've really tapped into that, and I'm sure Matt always has he's good at this stuff too regarding this bar. But if you have anything to add to that.
And you mean in developing the product? Are you involved in developing?
Well, no, we looked at the market. So obviously for Tattooed Chef to make their first step outside of the frozen department, we wanted to obviously take advantage of the fact that, there was 2 directions we could have gone. We could have gone obviously ambient with the bar, or refrigerated, right? And so we chose the path of going refrigerated from the perspective of refrigerated bars are still one of the faster growing subsegments of the bar category right now. The space is still being defined, so I think that we can play that kind of role of supporting that. The other thing is that there is not a lot of competition in the set. It's pretty much dominated by one player today. And that player happens to have a product that has, a lot of sugars in it. So we're obviously doing a product that is zero sugar and definitely different from a base perspective, using oat versus peanut as our base. So gives us an opportunity with 3 of our 4 SKUs to be allergen free. Obviously with the adaptogens as well, that's definitely a point of difference. And we think that we can help to define the category and bring more innovation there that's really been defined, like I said, managed by one brand for the time being.
Sure. Okay.
As a manufacturer.
Yeah.
Which is very important to us.
And how big are these 2 plants? Like, what is the max capacity out of each of the acquired plants?
So for the bar facility, they're currently doing about 30 million bars currently, and we could produce about 130 million bars out of this facility. So we got 100 million bar capacity. So we've got some great growth opportunity there. And then in the Foods of New Mexico facility, from the snack tortilla lines, I believe that we could do over 100 million, 150, and then on the burrito side, it could be another 100 to 150 million. And we said it, we believe that Foods in New Mexico had the capabilities to do to 250 million in revenue.
Yep.
So, our latest, I think, from a projection.
This is one, there's several great pieces in here, but this is one of those big moments, I think, in this conference from a few hours ago.
The company now.
With our current facilities, we can see run rate and have that clear line of sight to about $700 million in revenue in the next few years.
700 mil in revenue within the next few years. and speaking about it from just what those facilities there can produce, which is phenomenal news. Now, in order to get to $1 billion plus, it sounds like they'll probably, keyword is probably, need to either buy out more facilities or build more facilities. And right now, it definitely makes sense to buy out other companies rather than build your own facilities. But that's really, really good news. And I wouldn't be surprised if they end up over time being able to find ways that they could even increase more production on these facilities. All great companies, as they scale, they figure out these ways to do it. You know, even if I look at something way more complicated than what Tattooed Chef does, if I look at Tesla, right, which is flipping flapjack and building cars, they've been able to figure out ways to build way more cars out of Fremont than I think anybody anticipated. Same thing with the Shanghai factory, you know, and it's just like that's way more complicated than this. So you know, I wouldn't be surprised if they're confident they can get up to 700 mil plus in revenue over the next few years just from those facilities. That's like great news, because I wouldn't be surprised if they find ways to even get over that, right?
Just without any major capex, just with the existing facilities.
With the existing facilities, we will have capital expenditures. We are going to go through and automate. And Gasper, do you want to expand on that?
Yeah. Sure. So what we did is we looked at all of our facilities, and we found that we needed to go in there and look at automation and robotics to bring our efficiencies up. And in doing so, this year is pretty robust for us in terms of CapEx. We expect to spend a substantial amount of money focusing on that and ensuring that we can meet the capacity and efficiencies, along with we're going to be reducing our labor force to offset in order to increase our margins and so forth. It's a big agenda item for us at the company.
Okay. So I want to switch gears a little bit and talk about grocery. I mean, there's been such a expansion of doors and new partners, and it's been really quick, especially last year. I mean, a big growth there. So can you tell us a bit about how that is going? Where are you now versus expectations for this year, 2022, in door expansion? And then have velocities been what you expected with a lot of the new partners that you've launched into?
Doors just meaning products in a retailer or whatever, in shelf space, those sorts of things. When they talk about velocity, that means like how rapidly the products are moving, the sell through of that product. So if you put 15 items on the shelf, like how fast does it take to sell those 15 items through? And that's what they mean there.
No, I think it was an exciting year. I mean, the fact that obviously we attended Expo West last week, like I think a lot of other folks, and seeing people in person is great. And the fact that we were able to kind of get up to almost 15,000 stores by the end of last year was something we were really excited about. It's been, the strategy was get retailers to kind of learn about the brand. And so we obviously did that. We have a broad portfolio of products across a lot of different categories. We're in like 7 measured categories today as defined by the frozen foods consumption data. And so what we saw was the early adopters were kind of taking one category of products and then learning about the brand. But what now we're seeing is, as our business is performing in rest of market and they're starting to see the results, we're seeing a much larger acceptance of SKUs into multiple categories. So we kind of highlight our target case study where at the end of 2020, we started with 400 stores, 2 SKUs kind of was what the target team accepted. And at the end of 2021, we have 25 SKUs authorized and we're nationally distributed. So that's the model, and that's kind of what we're seeing play out. And we're really obviously excited about that. Clearly, certain retailers perform better than others just because of their development of their consumer, the plant-based consumer. Clearly, the coasts, we're seeing great acceptance. So, like our business in the banners of Kroger that are on the West Coast, like Ralph's and QFC and King Soopers, they're extremely encouraged by the results that we're having. The same that I would say about the Northeast and even the South, like with Publix and Ahold and Stop and Shop. The Midwest, I would say, is still learning about the space, and we.
It's a nice way of putting it.
fortunate to have a sit-down meeting with the Spartan Nash team when we were at Expo with their entire executive team, and they're asking us, like, how do we educate our consumers about plant-based eating, right? And how do we merchandise, and what are the right SKUs to start with? And so I think that is so I think that's what's really happening in grocery, is we're also starting to act as a consultant to the retailer in terms of understanding the consumer and really the next generation of frozen foods consumers, and helping them to accomplish that.
Okay. And what would the difference in performance be? I mean, if you were just to do a kind of regional, like, are they 2 years behind in certain parts of the region compared to the coast, or like, I mean, how different?
Yeah, I would say they're a year and a half behind. Maybe not two. I think it's the nice thing about the products that we have to offer, or the products that Sarah has created, is obviously nostalgic innovation, right, in the plant-based space. And so we think that the ability to offer a consumer a plant-based version of something that Sarah knows that they're super familiar with, like burritos, or a plant-based burrito bowl as an example, or a cauliflower pizza that is either vegetarian or vegan, but maybe topped with a plant-based meat. These are
just brought me to think about a subject real quick here. I think it's a huge advantage to live on the West Coast of the United States of America. I think it's a massive competitive advantage in the stock market. And the reason being, essentially, is you can see trends. A lot of trends develop in the West Coast of the United States. And so you can see these trends start and, get rolling before other folks just get to see it, right? And you can see it like right in front of your eyes. And so one of the things I go back to is like me with Tesla back in the day, living in Vegas, I got to see like more and more Teslas. And then I would come out here to Arizona and I would, go to Scottsdale and I would see like a good amount of Teslas. And I was like, wow, this brand's really, expanding. Like people are really driving these things and liking them, right? And people that could afford any car are choosing to drive a Tesla. Interesting, okay? Go out to LA and Los Angeles and like see Teslas everywhere. And this is years ago. This isn't talking about now. Now it's just a whole other level, but I'm talking about even years ago. And seeing like people that could afford any car were choosing a Tesla. That was interesting, right? And so same thing with the plant-based food space. I live out on the West Coast, obviously, and I get to see this trend evolving and becoming so big, and it's going to get a lot bigger in other places as well. It's just, they're a little behind, and that's just how it has to play out. So I just say like it's kind of an unfair advantage, to be honest, to live out on the West Coast, because you see these things emerge way before you see it emerge other places, and then you're like, oh, this is like a big thing. Okay,
flavors that people understand, and ingredients that people, or concepts that people understand, and we think that allows us to kind of bring them in, and so that's kind of how we're starting to educate these retailers that are a little bit behind.
Okay. And then club is still a hugely important channel for you.
It is, absolutely. I think that we still have, great businesses with both of the major club retailers. We're in talks with the third, BJ's in the Northeast to continue to introduce products there. The club channel is becoming the channel of innovation, right? People are, they're ahead of the game, and I think that's why we've been so successful there. Not only with some of the permanent items that we have at places like Sam's, but obviously our rotations, and we'll continue to, give them great innovation to obviously help them grow their category.
Nice. And what kind of...
By the way, the reason club, let's say Sam's Club, Costco, places like that, are always trying to innovate and come out with different products to get people to buy them and whatnot, is because if all they're trying to sell is the same bottle of Windex, right, and the same bottle of Lysol and the same case of water, they're only competing on price. And for companies like Costco, Sam's Club, it's important that they compete on price, but also, like, if they want to really help out their margins and their top line, you've got to introduce different products that people have never tried before or seem interesting. And it also makes the experience more fun from the consumer side. And if it's more fun from the consumer side, they're going to buy more stuff, which is why sampling is a big deal in club stores and things like that. And it makes it not such a stale experience of like, I just got to go to the store because I can buy stuff as cheap as possible. It's kind of like a little bit of fun because it's like I might find something in there that seems interesting that I've never tried before. Let me buy this.
Ability do you have for this year with club?
In terms of size of business?
Yeah, and what kind of promote. I don't know anything that you'd be comfortable sharing. I understand that you don't want to get too far out in front of talking about promotions and things, but as far as bringing new products or
Sam's been on the road pitching everything out of Foods in New Mexico. So let's just say that. So we're right in the middle of an MVM right now with acai, and that's obviously going really well, and one that has been a repeat, right? So that's also something else.
So it sounds like Sam Galetti's out there pitching specifically to maybe the club stores the new products, maybe the burrito products or maybe some future quesadilla products or something like that at club that sounds different than the traditional bowl business. So that's what it sounds like there, and maybe something other than pizzas. So interesting. I like that. And I'm sure the club likes that as well. I mean, imagine they launch a brand new product for the first time with some of the club stores. They love that, right? They love that.
MVMs is something that is a great accomplishment. And we think that we got a lot of opportunity in the club channel with the products out of Foods in New Mexico.
Okay.
Yeah, I think the Foods in New Mexico items, the items that Sarah created, I mean, it is incredible, the flavor. The key to this whole plant-based thing is just getting people to not have that big of a struggle to go to a plant-based diet, because as we all know, pure vegan foods sometimes don't taste the best. But these flavor profiles...
That's facts. As somebody that's like, I would call myself like 97% vegan. Yeah, facts, man, facts.
It's seamless. And that is the key to getting people to eat more plant-based foods. And that's why we're really excited. And if there was an area that we feel could be really just be incredible, it's all of these Hispanic plant-based food items.
Yeah, there's no trade-off with our products. It's plant-based and it tastes good. Yeah.
Okay. And then we only have maybe 3 or 4 minutes until I want to open it up, but talking about margin, gross margin, inflation, supply chain, all the kind of big issues of the day. How does it feel to you? Is the supply, environment and inflationary environment stabilizing? What can you comment just on what you're seeing?
So what we're seeing is the same thing everybody else is seeing. For us, it's not as much about food costs and raw materials as it is. There's a little bit of increase in paper goods, but it's really all about freight, logistics, and cold storage. And that's where we're seeing it across every industry. It's not just us. And at some point in time, that has to come back down. It's not sustainable forever for these costs to continue to increase throughout the United States. So we believe that there will be some relief at some point. We don't know when that is. We will turn around and mitigate the costs that we can. And we have kept additional inventory to make sure that we are in stock so that we're not having a supply chain issue. And that's the most important thing to us right now. We'll continue to assess the situation when we talk about margin, but that's one of the reasons for automation, is how can we create more product in the same footprint, less labor, and really take advantage of what's available to us. We have the economies of scale in which we can purchase more product if we can run it faster. And that's where our focus is going to lie as we go into 2022.
So if I were to think about, I know there's a lot of uncertainties just with the pricing environment, but if I was to think about your path forward in raising your gross margin over the next couple of years, between pricing, automation, new product categories, how would you kind of rank order these different initiatives and what kind of impact they can have on your gross margin?
Yeah. So first of all, as we've been noting, the robotics that Gasper is going to be putting in place, we just feel there's so much improvement that we could do because our facilities are, it's just there's a lot of improvement there. There's also a new cold storage that we just entered into an arrangement deal with that is going to save us a ton of money in just because logistics and cold storage. But then also it's diversifying our product line into ambient and refrigerated products. The bars, the snacks, they offer a much higher gross margin than frozen products. Frozen products, there's a limited amount of freezer space, and so it gets a little aggressive, and the distribution costs are higher. So we are winning in a freezer with legacy brands, and we are doing it with plant-based foods, which is incredible because, to get people to want to try plant-based foods and then get those repeat sales is saying that we are really leading in plant-based. I don't know anybody as for value-added products in the market today that's leading with the kind of lifestyle that Sarah has been, talking and creating. So, but as far as the margins, go back to the margins, I feel that there's just levers all over the place that we will be able to improve it. Just also the fact that
levers all over the place that they're going to be able to pull for margins and profitability over time. And I was speaking about a friend about this recently, and I was trying to tell him, essentially that revenue solves all and scale solves all. As a company gets their revenues up and gets their business to scale, they will find ways to bring down costs. I've never seen it where a company continue to scale their business and they couldn't find ways to bring costs down and get very, very profitable with their business model. They all do it. And when you're in that funny stage of you're scaling your business, you got that big revenue growth, you're on your way to profitability, you get a lot of naysayers that say, oh, you're never going to be profitable, your margins are horrible, things like that, right? Obviously, that was something I had to hear with Tesla all the time in 2018, 2019 when I was buying that stock. It was like, oh, their margins are horrible, they're going to never be profitable, all those sorts of things, right? And the thing that always gave me confidence that they were going to get there is I'm like, wait to see this business scale. Once they reach scale, they're going to figure out so many different cost synergies and ways to do things cheaper and ways to do things better that are going to save them cost. When businesses are new to scaling, they're just worried about that revenue growth, that brand, those sorts of things. You're not at that stage where you can think about all these different ways we can improve our margins and profitability and those sorts of things. That's something once you already are getting to scale, you can start really, pulling those things. And so when it comes to like the chef, it's like, over these next several years, their margins will continue to increase, in my opinion. Like they've got probably 5 years in front of themselves where their margins are going to improve year after year after year after year. Never mind, you add on this supercharged, headwind to a tailwind situation, which is all these inflation measures, right, that are working against the company right now. As those subside over future years, the margins are going to increase year after year after year. And so Tattoo Chef will go from just being a revenue story to then it will become a margin story of a margin increasing story. And then it will also become a profitability story all simultaneously. And so that'll be the really exciting thing all simultaneously, while the biggest thing is happening where people are finally understanding the plant-based food movement. And that it's not just something that's here today and gone tomorrow or something like that. And that's just going to continue to get bigger and bigger year after year after year after year. There's a lot of big moments that are going to happen there. And obviously that's going to be reflected in the stock price in a pretty insane way. Let's just leave it there. Okay.
We have thrown on so much expense from a private to public company, right? Yeah. The expense to be public and the infrastructure that we had to build up. And the market. Yeah,
just going private to public. I mean, that could be millions of dollars of extra expense. Depending upon the company, that could be anywhere from $4 million, $12 million just an extra expense just for literally existing as a public company versus a private company and the different infrastructure you need to do that essentially.
Dollars that we're spending now to do this brand. So now we've got it based on our revenue today, but we've built something that we could, when we double our sales, the increase in cost are going to be minimal compared to what we need to sustain and have today as the volume of revenue that we do today. So, I just think that our gross margins could go extremely, be very good in the future.
Okay.
That's a huge moment there. That's a huge moment. And, it's not something that's reflected in the numbers today, obviously, because they're not to that point. But a year from now, 2 years from now, 3 years from now, it's going to start being reflected in the numbers. And this is why scale is so big. You need a certain amount of employees and operations and things like that. But as you reach that scale, that's where you really start to hit that profitability. When you go from let's say 250 million in revenue to 500 mil. And you don't need to increase your expenses nearly as much as when you were going from, let's say, 25 mil to 250 mil, right? And so every product you start to produce becomes a much better margin profile and much more profitable for the business model. And so that's just a huge moment there that you're going to see over the future years with this company.
Any questions from the group?
How do you plan on achieving the automation component? Are you partnering with a tech company, or are you going to acquire something, or how will that work?
So we've gone out and brought in equipment companies that have been vetted out to be able to produce our products the way we want to, bringing in equipment such as depositors or the back end gardeners and so forth. We have a unique product. I mean, bowls, not everybody's been able to automate bowls in a way we wanted to get done, but we've been able to accomplish that by bringing engineering in and looking at that too. So we're very confident. We've already laid out the blueprint at all of our facilities. We've already put out the money to acquire it. We're now in the production stage of building out the equipment as we speak.
And how sizable are these investments?
Am I able to?
No.
We'll talk about it on Wednesday.
Wednesday, okay. Any other questions? Anyone else? Okay, so I have one more, or maybe two more. At further M&A, do you see anything else that looks compelling? And like what areas?
Robots, not a bad idea, especially if it's a very repetitive task in making products. And the robot can probably do just as good of a job, if not a better job, at many of those repetitive tasks. And obviously human can in a time period where wages are obviously massively going up. That can be huge cost savings, obviously.
Actually, I'll skip that part. Do you see anything else that looks interesting?
Every day.
Yeah.
I mean, it's
and what's the formula?
Again, it's a fact that plant-based has not even been fully understood, and it's not even, people don't realize where this thing is going yet. And so when we're looking at even more now in capabilities than capacity. In the past, we've always talked about capabilities and capacity, but now it's just like, it's really all about where do we want to take Sarah's next nostalgic innovation in capabilities of what products we want to start going out there. Like, we're going to do the snacks, the chips, and the bars are going to come out next very soon. We had a great show at Expo. People love those bars. We're very optimistic that we're going to get some distribution going with that. So we're constantly out there listening to what's available and thinking what could be the next plant-based nostalgic innovation that we want to get into, but it's endless.
And will it follow the same formula as the two from last year, as far as usually it's a manufacturing, not branded plant? It's the same kind of
exactly
playbook.
Because it's just so much more financially economical.
Yep. Okay. And then I didn't ask about you taking price. Is that something you've done much of so far?
You taking price, basically what that means is just raising price of products.
Do you plan on doing that?
Taking price increases?
Yeah.
I think like our brand out there that we're getting all this distribution, we were already like a higher price. So, if we do look at some price increases, it'll be more from probably our private label business or maybe some club business. But definitely we have a lot of, like I said, levers to pull from to increase our internal gross margins. Really, we have such an advantage because we're a manufacturer.
Yeah, it's a problem. If you're a super legacy company, you don't have any way to really increase profitability because you've already thought about everything because you're established and, no one ever heard of Tattooed Chef brand 18 months ago, right? So this brand's like brand new. So the amount of cost synergies they're going to be able to get in future years is off the charts, right? And the way they're going to be able to increase their margins and things like that. If you're a super established company that's been around for, 50 years, 30 years, something like that, 100 years, like, you got nothing. So the only way you can really get better margins over time is by increasing price. And with Tattooed Chef, they don't even they can do that if they want, but they don't have to because they're so early days in this business model.
When you look at our gross margins and you sit there and then you look at our adjusted EBITDA, it's like, what we're able to accomplish as a manufacturer just shows the potential that when our margins really get in line with the rest of the industry, how profitable we're going to be.
Okay. We have about 30 seconds left if there's any.
There was no more questions, but anyways, hope you guys enjoyed this. Let me know in the comment section if you enjoyed something like this. I can do this on future companies when they're at one of these conferences and whatnot. Obviously, I remain, more bullish on this company than I've ever been. My plan is to just continue to acquire shares of the stock and increase my ownership throughout the year. I'm super jacked up about the growth of this company, what the margins will end up shaking out over the coming years, and how profitable this business model will get in future years. And this is one of those companies that, there's so much growth ahead of them. Like, I don't know when this company stops growing, but it's so many years from now that I can't even imagine it. And so, yeah, and when it comes to me and trying to, explain the plant-based movement and how big these companies are really going to be 5 years out, 10 years out, it's hard for me to, it's a very difficult challenge for me to explain because, like I said, I feel like people are they're either all the way on or they're all the way off. And it's hard to explain to folks that are all the way off on how big this opportunity is. I just don't think a lot of people get it yet. And, that's just the toughest thing for me because I look at some of these companies and some of the share prices are trading at what I would call joke prices compared to where these companies are going over the next 5-10 years. So, at the end of the day, I just have to keep accumulating shares and we'll just continue to do that. And the stock prices will skyrocket in future years and everybody will be like, oh my gosh, look at what Tattooed Chef's at now. Look what Beyond Meat's at. Look what Oatly's at. But you just have to have that time pass. And then everybody starts to get in more and more. And next thing you know, people start jumping on the bandwagon and, it's the same story as always. So anyways, guys, hope you enjoyed this video. Much love. Appreciate you joining me. Don't forget to subscribe to the channel. Also, if you want my free stock market investing mastery course, I made that free since the market's been so rough recently. I thought, let's go ahead and make that course free. So check out pin comment for that, access that, and enjoy that. Much love and have a great day.